This content is brought to you by TaxBit, which is the leading tax service provider in the crypto industry. TaxBit allows you to easily connect your crypto exchange accounts and pulls the data in and then calculates your crypto gains and losses. And then it provides you with the respective forms that you would need to submit to your accountant. This is a service I've been personally using for years to calculate my taxes around crypto trades, and I will be, of course, using them for this tax season. So if you'd like to learn more about TaxBit, please visit the link in the description. Welcome back to the Thinking Crypto channel, your home for cryptocurrency news and interviews. With me today is Greg Dickerson, who's an entrepreneur, real estate developer, coach, and mentor. Greg, great to have you back on the show.
Hey, Tony, good to be back.
Greg, we talked a lot about the Fed last time and Bitcoin and the markets. And look, the things have rapidly progressed with now world conflict with Russia and Ukraine and the Fed meeting today. So I want to talk about all of these things, but let's start with the Fed's meeting today. What was your takeaway from what Powell had to say?
Yeah, so the Fed board did not meet. That was just Chair Powell going before a couple of Senate committees and banking committees. He's got another one tomorrow. So the actual meeting is next week. I know the CPI prints on the 10th, I think it is. So he meets like Wednesday or Thursday next week, the Fed board. So he just basically told them what he was thinking. It was really interesting. And there's some information out there on CNBC where they did some video clips of his testimony. And it was really cool because he explained to them how he's thinking and how he's viewing things and how he's making these decisions. But basically what he said was his vote and his inclination is for a 25 basis point rate hike, and that's it. Not thinking about the balance sheet, not cutting out their purchases completely. They're still purchasing treasuries and mortgage-backed securities. They may discontinue by then, but they've been weeding it according to their previous plan, but they haven't stopped completely. So at the end of the day, it's just a quarter-point rate hike in interest rates. So that's why you see the markets reacting today, because that was good news. That means it's still, printer go burr. It's still going.
Now, I saw Peter Schiff tweeted out that they've been talking a lot, but they actually haven't done anything yet. Do you think this is another bluff and markets, if they were to try to do something, markets could price that in? But, it's hard to tell. At this point, we're speculating. But what do you think about, would they actually do something?
Yeah, I think it's certain this time they're going to raise rates quarter of a point. So that's absolutely, and it's baked in. The markets have already factored that in. And it's a very soft response. The markets actually thought that a half a point, 50 basis point rate hike was coming. So all we're getting is a quarter point. So that is good news for the markets, but it's temporary good news, right? It's just algorithms and trading bots that, are creating the reactions, and then retail investors follow. But, there's still a lot of uncertainty out there. There's still a lot of, inflation's still a big problem. It's going to get worse. The most interesting thing that he said is he still is calling inflation transitory without using the word. So he said his belief is inflation is going to peak and level off and start declining by the end of the year.
Do you think that the quarter point will be the only interest rate hike this year, or do you expect more later in the year?
That's the thing that he didn't say. He said the same thing he said last time. We're going to be nimble, we're going to be humble, and we're going to watch the economic climate in terms of what we're going to do moving forward. But no, I think they're going to have to get more aggressive, and they're going to have to hike every single meeting in order to get control of inflation. I think he's absolutely wrong. I don't think inflation is going to peak this year and start moving backwards and be back to they're not going to get back down to 2% anytime soon, in his opinion, but he thinks that they're going to get back below where we are now by the end of the year. I don't see that happening without a bunch of rate hikes.
So with that said, what is your outlook for stocks and real estate, given that quarter points coming and potentially more interest rate hikes later this year?
Yeah, real estate's different. So real estate is actually still doing well, and mortgage rates actually went down recently. They had ticked up a bit, but with the war, there's a flight to safety. So a lot of money going into treasuries, which lowered rates. And a lot of people, don't understand how that works. But the more people that want treasuries, the lower the rates, because you have more buyers they're competing, for that asset. So the price, the rate goes down that the Fed has to offer on those treasuries versus the other way around. If nobody's buying, you got to offer more attractive rates to get them to buy, which you saw what Russia did. They started offering 20%, I think it was, for deposits at their banks or something like that, interest rates. So mortgage rates have actually dropped, and there's been a big demand hike and big demand for mortgages and refinances and things like that, when the week before they were a record low. So very sensitive to rates right now. And if rates go up, real estate prices will go up, mortgage demand goes down. We still have a very limited supply of inventory out there. Until that changes, it's not going to change real estate a whole lot, but that's a slow thing to happen. It's going to take some time for that to work through, inventory levels to come up. And what I tell everybody is, if you want to buy a house, or you're looking for a house, I would wait for the rates to rise, because prices will adjust, and the key is the home builders. So the big home builders that are building big subdivisions, when rates go up, their buyers are going to get stuck and won't be able to buy the house. So they will be losing a lot of sales, and they won't have a lot of buyers, because if builders are building houses that are costing them, or they're pricing them at $500,000, then interest rates, just to give you an example, if you can afford $2,000 a month, that means you can buy a $474,000 house at 3% interest rates. That's what you can afford of a payment, to make. And then at 4%, that's 418,000, goes down, basically 50, 60,000 bucks. At 5%, it drops to 372,000. So you look at a $100,000 decline in the value of a house that you can afford with a $2,000 a month payment, if rates go up from 3 to 5%. And we were in the 4s recently. So home builders can absorb that. Big home builders, if they start to see, demand drop, and they start to see inventory stack up, they'll start selling those houses, and they'll cut prices, and they can take that loss, because they're building thousands of units all over the country. So that's where you're going to get your first deals. That's where you're going to see the first sign of the change in the housing market, is with the builders. And then you'll see it work its way through the resale market, because it takes a lot longer for the average homeowner to adjust those values and prices in their mind than it does a builder who's seeing it at the retail consumer level.
And what do you think would be the impact on stocks? And also, I know we're going to talk about this after this respective question, but it seemed like Bitcoin and the crypto market deviated a bit from the correlation it's had with the stock market, given the Russia-Ukraine invasion or crisis, or whatever you want to call it. What's your take on how the impact will be on stocks?
Yeah. So interest rate policy.
Yes.
Yeah. So interest rate policy, again, the more hawkish the Fed is, the more difficult that's going to be on stocks. And we already saw, stocks, deleverage. So we're seeing some deleveraging. And what happens is the cost to borrow for like hedge funds and investors out there goes up. So, that, affects their ability to borrow, and they have to take risk off the table. So that's where you've seen the deleveraging going on. And then we saw a repricing based on the expectation that the Fed was going to have to be a lot more hawkish with a 0.5 point hike and maybe reducing the balance sheet. Then we had the war break out. And when that happens, you get an automatic sell-off, and then generally you'll get a bounce after, everybody kind of understands what's at stake, what's going on, what the conflict looks like. But the markets right now are anticipating what's not priced in is the results of inflation, the effects of inflation, the effects of war that we're going to feel 6 months, 1 year down the road. That's not priced in. We'll get there as we get closer to those things. And if the conflict escalates into World War III, and you get NATO and you get other countries involved, then you will see a big drop in the markets. And but it'll, probably, depending on what that looks like, could potentially snap back, and you see a flight to safety. So the question is, what did we see the other day in Bitcoin? So markets right now are in a bear market. Stocks, NASDAQ, S&P, and you're seeing, when you see big 600 and 700 point fluctuations, down one day, up the next in the stock markets, that's bear market activity. That's bear market behavior. And if you look at the charts of where we are in the traditional markets, you'll see that they've rolled over into bear market, declination. So we still have another 10, 15% to go in traditional markets before you see any kind of a more long-term bottom, given the current conditions and given what the Fed just said. we might level off for a little bit because the Fed is coming out a lot more light-handed than we thought. But, a lot of eyes are on the conflict and whether or not that's going to escalate. But right now we could be having sort of a local bottom, kind of itch our way down a little bit until we get some more guidance from the Fed. And you might see a good reaction next week if they come out with just that quarter point rate hike. Markets could bounce. Now, what we saw the other day when the war actually broke out, markets were down. I think Bitcoin was down that day too, but then everything snapped back. But then it was yesterday where markets were down big and Bitcoin went up. So my thoughts on that are you had three things happening. One, you had a little bit of a flight to safety. Some investors were looking at Bitcoin as kind of a safer play right now, for the moment. You saw, obviously, there was some short coverings, because people go short at the bottom when they should be going long, and they go, long at the top when they should be going short, right? So, you end up with some short covering, and now we're seeing little drops, and that's, longs getting liquidated and things like that. So that was the other thing you saw. And then there is a potential that some, when I say the flight to safety, potentially could have come from, Russia. I know they were loading their war chest before this went down. So they bought all their Bitcoin, their cryptocurrencies, and they were protecting, and putting away their assets before this happened. There is speculation that some of the buying, was due to maybe Ukrainians or Russians trying to do something with their currency. But I don't think that's the case, because if they weren't already set up to do that, they didn't get set up in the last couple of days, in terms of being able to communicate with their bank to get funds into their account to actually buy crypto. So unless they were already set up and they had money and they just jumped in, that is a possibility. That could move markets a little bit, but not like we saw. That was a big move. That was the third thing is rotation of capital. So right now what you're seeing is a little rotation of capital, where think of the stock markets as the fourth leg of the crypto market. So Bitcoin generally runs first, then it flows into large cap alts, then small cap alts, right? That's been or Bitcoin, Ethereum, then large caps, then small caps. That's the capital rotation in the crypto market. Now you need to add stock markets to that. So stock sell-off rotates into Bitcoin, rotates into Ethereum, rotates into large caps, small caps, back into the stock market. So you're kind of seeing that rotation happen because markets are up today, Bitcoin's down a little bit, and crypto's down. We're kind of ranging, trying to figure out whether it's got another leg up or if we're going to get a little drop. So I'm thinking we're starting to see a little bit of rotation of capital, because a lot of it are the same investors in traditional markets that are in crypto now that have come on board in the last 12 months.
Yeah, absolutely. And I know we've both been tracking certain models by certain analysts like Blockchain Backer and looking at Bitcoin's retracement, which I think we both agree seems to be the next move, and maybe hitting that 55 to 58K range, then correcting into a bear market. But there are other models out there. At this point, it's which thesis you want to bet on. What is your take on the retracement? And then, like you said, the capital then flowing into alts.
Yeah, so he's been following a fractal from the 2018 bear market cycle where that retracement came in. And it looks like it's on track. It looks like it's following that pattern. And it's what Bitcoin has done every single market cycle. After every peak, it drops, it retraces and drops, and it retraces and drops all the way down. So every big drop, you get a retracement back to that 618,702, and it happens multiple times in that declination. So it looks like we're due. Now, one of the theories I was looking at was, did we retrace for this cycle back after June, July, when we retraced and we had an irregular correction and went for the second leg? So that could have been a retracement that just was irregular and went off to that second all-time high. And now we're just going straight downhill. But part of that downhill would be a retracement right now, where we're at, back into that $55,000 level. Hopefully it's not this little bump that we're seeing right now. I hope that's not all of it, but it could be. You just really don't know. And there's so many things out there, but Bitcoin seems to be following that fractal pretty close. So until it deviates, you got to believe that, that's what we're looking at. And it was really only Blockchain Backer that was looking at that fractal versus like a plan B, right? So you could see with as many followers as he had and as much popularity that was out there, he was right on for those last couple of months before, the last 69,000 top. and the model deviated because there just wasn't enough buyers over 69,000. So I think that, the market makers and the whales were using his model to push price because everybody was watching it. Yes. So they were kind of manipulating price to that model until there was no more appetite at that upper level. So I don't think blockchain backer, and there's not enough attention yet on that model for the same thing to be happening, but it does seem to be an algorithm that has been priced in to move the market that it's following, and it's done it every single cycle. So we'll see if it holds up if 69,000 was the top and not 64. So the theory is 64 could have been the top, and that was an irregular correction and retracement, but he's saying 69 is the top, and we still have that big retracement like we saw, back in May, June of 2021.
Yeah, absolutely. It's weird times we live in, and trying to understand what this market cycle is doing. And you layer in, of course, the conflict that's taking place in Russia and Ukraine. Of course, we're thinking about the folks in Ukraine, and we hope the situation doesn't get worse, but it gets better. But I've been talking a lot about it. The undertone to this conflict seems to be crypto payments and SWIFT. And to your point, we saw that folks in Russia and Ukraine were going towards crypto and buying Bitcoin. Do you think that there's a possibility of we're still in the bull market, and these conflicts, these macroeconomic issues and geopolitical issues will contribute to the adoption of crypto? And we're seeing Ukraine asking for crypto donations. So it's something is happening here. I don't know, how to put it all together yet, but what are your thoughts?
Yeah, I mean, so it's a borderless peer-to-peer exchange of money, right? That's what Bitcoin was created for, was peer-to-peer, borderless, no third-party transactions, that you could just instantly transfer money anywhere in the world. So absolutely, crypto has a place. That's why the space is growing so much. That's why, we are seeing more and more adoption. There's different use cases. Obviously, Bitcoin is largely seen as a risk asset, and it's being used as such. So is Ethereum and some of the tokens. But, now we're seeing real use case with real people. The question is, how do they now use it over there? Because, obviously there's Russians, their banks are closed, they can't get any money. So how do they, other than peer-to-peer, how do they use it? So the use case is being tested, and it's and we saw it with Canada, the same thing going on in Canada, where bank accounts were being frozen and seized. Now there is reports out today that the US is looking at ways of sanctioning somehow cryptocurrency. So it'll be interesting to see how and if they can do that. And, with it being on the blockchain and being so visible, they could potentially track, some movements in some wallets and seize it, like they've done with these, with these other money laundering situations that they've done recently. So it'll be interesting to see if they can stop some of that activity that's going on, where like the oligarchs and possibly Putin himself are trying to launder money and get money out of the country. But yeah, it's absolutely proving itself as something that's needed. And that's where you're seeing governments recognize and realize that a CBDC, is potentially, valuable in that regard. Because if Ukraine currency was all of a sudden digital, well, then they wouldn't need cryptocurrency. They could just use their own digital dollars, and they could easily exchange that into, USDC, USDT, whatever, versus a cryptocurrency that's so volatile. The only downside to what's happening to them is, sure, we can donate money, but it could be half as much next week or tomorrow, sure, with the way the markets are. So that's the only downside to that. So you do need a stable coin. And I think that's what a lot more people are doing, is they're getting into USDC or USDT instead of actual Bitcoin or Ethereum. So they have a constant value of exchange there, and they're not losing value on their money and dealing with these fluctuations.
Now, to the point of what you brought up with sanctions on crypto wallets, I did read about that. Biden, I think there were, maybe orders, if you want to call it, that were given to some of the crypto exchanges to put the guardrails around certain wallets and make sure they don't go out or try to do anything with those respective wallets. There's been talk about the Biden crypto executive order. What are your thoughts on that? Could we potentially see that this month it's been rumored since January, but it seems like it's coming, but we don't know when.
Yeah, and that's more geared towards, like you said, KYC with exchanges, more transparent rules and regulations for exchanges, for funds, things like that. So a lot of those, could potentially be positive things in terms of bringing on a spot ETF, things like that, bringing more larger scale investors into the game, like sovereign wealth funds, institutional investors, like pension funds, life insurance companies, where the big money is, and the general population. So people my age and older are afraid of cryptocurrency because of the volatility and there's no regulation. Sure. So all of those things can be useful and helpful. And I mean, I'm absolutely all for being able to shut Putin down right now if we could track him. Absolutely. He needs to be. I mean, that's how you bring them to the table, is you shut them down and shut them off, and you close off their economic viability. So that's absolutely what needs to be happening. I know a lot of people don't agree with that and think that nobody should be able to do that. But if you're committing war crimes and you're doing what he's doing, you need to be shut down.
Yeah, absolutely. I think it's to a point of survival and people's lives, right? It goes beyond, prices of assets and things along those lines. He needs to be stopped. What's your, I don't know how much detail you can give here, but I'm curious, what's your strategy for crypto in the short term and the rest of the year? Are you taking some profits at, let's say, Bitcoin hits that retracement? And then, are you expecting an alt season, and will you be taking profits then? Or are you holding, long-term?
Yeah, no, I'm not a long-term holder in crypto right now. I didn't start really getting into it until after the March 2020, around that time frame, 4,000 or 5,000, somewhere around there, and in and out. So, I don't hold anything long-term. I'm just in and out doing some swing trades, things like that, and just kind of playing with the momentum of the market, because I don't know where it's going. I don't know for sure if it's going to ever get back to 50,000 or 55. I don't know if it's going to go below, 30 or 20. I mean, I have my ideas and my thesis, but I don't know for sure. Nobody does. All we know is what's happened before. And we know it went down to, 4,500 in March of 2020. And we know it went to 69,000 in November of 2021. So we know the range. So you have to manage that risk and your appetite. So right now, there's no evidence that it will hit 100,000. Nobody can show you 100% absolute proof it's going to hit 100,000. You can assume, you can guess, and you can say, hey, it looks like it should with adoption and things like that. There's no guarantees. And just like nobody can show you it's absolutely going to hit 4,500. There's nothing on the table that will show you that is going to happen. All you can say is these two things happen, so that's my range. And that's what I'm doing right now, is I'm trading that range. And as that range expands, then, I'll work within that range, up or down. It really doesn't matter to me. I catch the lows and I, exit on the highs, and I don't catch all of it. My goal is if I can glean 10 to 15% on moves, when you're moving enough, that's all you really need to do. And, I didn't get in at a basis where I understood where I could be a long-term holder. And there's too much, uncertainty to have a long-term view and know 100% with certainty, yeah, we're going to hit 100. Yeah, we're going to hit 250. Yeah, we're going to hit 500. I mean, those are just, that's just an idea, a thesis. I mean, there is no, you just can't prove that model.
Yeah, no, I absolutely agree. I am also doing some swing trading to bring in some profits while I have my long-term hold bag. But to your point, the long-term hold, it's pretty painful with the volatility that we have to go through. But it is a thesis that the price will, go higher, but we'll just have to wait and see. Final question.
When you look at the fundamentals, it looks like it should definitely get to 100,000, maybe beyond. The thing is that, I understand how large investors think. They're not buying at 100,000. They're just not. Life insurance company's not going to come buy $100,000 Bitcoin because they're looking at what I'm looking at. What you need to understand about sophisticated investors, and I'm not talking about Michael Saylor. He's a gambler. A lot of people look at him and think that's institutional investors. That's not institutional investors. He's a gambler. So institutional investors are life insurance companies, hedge funds, sovereign wealth funds. The first thing and the foremost thing they think about is risk. What is risk? Preservation of capital. How am I not going to lose the basis of my investment? That's why they buy hundreds of billions and trillions of dollars of treasuries at 1.5 to 1.8%, because they don't want to lose their money. And when you have trillions of dollars, you don't need to earn that much. You don't need to take a lot of risk. The ones that do need to earn are the pension funds. So they have to earn a certain amount of yield so they can continue to pay those premiums. And so do life insurance companies. So they can take a little bit more risk, but what they do for a living is they assess and calculate risk, and they hedge that. So when you think about broad scale adoption of those trillions of dollars coming into the space, they're not buyers at 100,000 or 200 to 500 because your downside is too big. That's the thing you got to remember about that. So they want to come in at, these levels that we're at now, 30, 40,000, but they're going to exit and they're going to come back in and they're going to exit. So, I mean, they have trading desks, and that's what they do. And they're in and out of the markets all day long, just like the investment banks. Right. So the people that are setting up shop for broad scale adoption that regulation is really going to bring into the space all have trading desks. They're in and out of the market. They're not buying and hanging on, forever on, the hope that a price is going to hit a certain point. I'm not saying it can't, I'm not saying it won't. I'm just saying that's how institutional investors think. And when you go out there and look at macro shops, they pay a lot of money to understand risk. And that's how they make all their investment bets.
Final question before I let you go. Are you holding any gold, and what do you think about gold's performance?
No, gold is volatile. Gold had its day. When I first started looking at gold was probably 20, 25 years ago, and I didn't do anything with it. And I probably should have. It was $200-300. I've been all real estate, prior to the last few years, other than stocks back in 08, 09 at the bottom. I like to jump in when it's at the bottom, and that's when I bought stocks, and I held some stocks for a little while. But again, I'm a merchant, I'm a trader, I'm in and out. So I build and sell, buy and sell real estate companies, and financial assets. And that's been my goal, is to compound cash and to have a pile that I make bigger. That's my thesis. That's what I do, is I take the pile and I make it bigger. And, so back when I was looking at gold, and all the old timers back then were telling me, just buy gold, just buy gold. And yeah, I could put 100 grand back in gold back then and be worth, I don't know, 10, $20 million doing nothing, over that time period. But I did a lot better doing what I do than that. So for me, gold doesn't work because that's too volatile. And I think it's going to peak at a couple $1,000 or something. And, it'll probably go back down again, and just it's in a range. I just don't see gold as an asset that's going to reach these huge numbers either that a lot of people think, because Bitcoin, crypto, Ethereum, that's taken a lot of that capital away from that market.
Yeah, absolutely. And when I look at the gold charts, it's kind of boring compared to crypto and the returns. But, I know some folks are very, they have a strong mindset on, it's a great hedge and so forth. And certainly in certain times it is, but I don't know. I prefer crypto. I prefer stocks, and it's a bit faster moving.
Yeah, they're more exciting. You can make bigger swings in it. And, gold, the problem is it has gone down a lot from its peak, back a number of years ago when it peaked at 2000 the first time. It dropped all the way back down. And I don't like that. I like things that go up.
Yeah. Greg, always insightful, always a pleasure chatting with you. Thank you for joining me today.
Hey, thanks for having me. I enjoyed it.